Hello everyone and welcome once again to another session of the NZX Retail Webinar Series. As ever, my name is James Sharp and I'll be introducing our speakers to you this afternoon I should say. Hope everyone is well. Amazingly, we now find ourselves in the second half of the year, how time flies. So just before we get started, a couple of points in terms of housekeeping. So we're going to hear for 15 minutes, two presentations, and at the end of each 15-minute presentation, we'll have 5 minutes of Q&A. To ask a question, please do so via the webinar panel, which you'll see on your screens. So to do so, that is a private private chat box, so that will go straight through to the NZX team in the background, and quite incredibly, it then appears on my screen just to my left, which I can then ask our presenters with. Anything we don't get to during the session, we'll get to after it finishes, and we'll get some answers over to you in due course. Fantastic. Let's get started. So first up, it's a pleasure to welcome David Page, CEO of NZX Automotive Investments. NZAI is an integrated used automotive group operating throughout New Zealand. Its mission is to deliver quality cars and financing solutions at the most affordable prices to the average New Zealander. And on a personal note, I did buy one of your cars, David, about 6 months ago, and it's running like a dream. So there's some feedback there. Over to you, David, and I'll be back in a few minutes with some questions. Thank you.
Thanks, James. Fantastic to hear about your car, and thanks everyone who's joined today. I'll just share my screen, won't be a moment. There we go, and we're underway. Today I'll be providing an overview of NZAI, including our operation, our history, our recent trading performance, as well as our strategy for growth. This will include the opportunity presented to us by the government's clean car policy. And as James has said, at the end, we'll have some time for Q&A. NZAI is an integrated used automotive group throughout New Zealand, operating two divisions, our automotive retail division and our vehicle finance division. You'll see here on this chart that our automotive retail division is made up of two parts: our procurement team, who are based in Japan, and our retail sales team, which runs under the banner Too Cheap Cars here in New Zealand. We also have our New Zealand Motor Finance division, which operates our automotive finance business. Our retail business operates under the Too Cheap Cars brand and includes both procurement of vehicles out of Japan and also the retail sales in New Zealand. The Japanese-based team, this is 6 people based up in Japan, attend the auctions, physically inspect our cars, make sure all the purchasing is done locally on site, and improve the quality and reduce the cost of timing delays. Once we've procured the cars, we work with third-party partners who complete the logistics and import process for us. When the cars arrive in New Zealand, they're then independently certified by NZA-approved third parties, and then we complete our own internal checks on the cars, which includes a full service and groom, prior to distributing to our dealerships and then moving on to sales. In our sales process, we're seeing a growing number of sales done through our digital platform, as well as our growing dealership network. One of the key things to call out here is it's quite an efficient process once they arrive in New Zealand. It only takes about 23 days on average for cars to move from the dealership, from the distribution through to sale. Our customers are everyday Kiwis looking for cars priced between about $5,000 and $15,000. Our typical customers are teachers, nurses, police, young professionals, and students. We operate 12 dealerships nationally, and historically we've sold between 10 and 11,000 cars per year. This number dropped back into about 8,200 in FY21 due to the effects of COVID and having our dealerships closed for 68 days, which equates to about 19% of the year. With COVID behind us, we're back to previous levels and looking to grow. We sell a range of well-known brands: Mazda, Toyota, Honda, Nissan are some of our biggest sellers. And on each of our dealerships, we have a team of dedicated finance and insurance managers. Finance demand continues to be strong and is a real growth opportunity for NZMF. We have a good headroom to grow. You'll see there 8.3 million capital raised in FY22. We also have a great number of opportunities in front of us in this finance business. The opportunity really, if you look at the numbers there, 30% of our customers at 2cc or 2 cheap cars finance their vehicles at purchase. Currently, we only fund 4.6% of those vehicles through NZMF. So this is an obvious opportunity for us, while there is a balance, because we do have a great relationship with our existing funders who do provide funding to those customers and do provide us a revenue stream. So we're working through that, but there is a really good opportunity to grow the finance business. Also worth calling out is the fact that we've got about 138% growth in FY21, and we've now helped over 500 customers through New Zealand Motor Finance purchase their cars. Our selective criteria has also led to a good quality portfolio, as evidenced by 0.11% write-off rate. A little bit about our journey. So the company was founded in 2011 by the founders Eugene Williams and David Senna, opening the first dealership in Auckland in 2011. In 2014, the company was recognised in the Deloitte Fast 50 as the fastest growing retail and consumer business in New Zealand, and the second fastest company growing overall. In 2017, our Japanese offices opened, and this is when we started doing our in-house procurement. Sorry, I've just lost my slide deck. So if you just bear with me for one moment. I have to go to the paper.
David, if you just try.
Sorry about that, technical difficulties. So in 2020, we sold our 60,000th vehicle, and we're also awarded the Reader's Digest Silver Quality Service Award, which is a big milestone and something the team are very, very proud of. In 2020, the decision was made to list the company on the NZX, and through working with a number of advisors, we appointed an experienced board and management team to provide strong governance and lead the company's expansion and drive the growth strategy. We're successful in listing the company in February 2021 on the NZX main board, and recently announced our financial results, which showed us achieving above guidance and delivering a strong dividend yield, demonstrating the ongoing profitability and resilience of the business. We have a clear strategy going into the future, and I'll share a bit about this in a moment. But ultimately, it's about delivering to our purpose, which is helping Kiwis afford great cars. In the 3 years leading up to FY21, NZAI achieved an average revenue and income of 76 million. And during this time, the average EBITDA, including financing income on a normalised basis, was 7.4 million, representing around 10% EBITDA margin. COVID saw us, as I said earlier, close for about 68 days, but we adapted, and with good cost management, minimised the impact of maintaining the platform for growth. Cash flow remained sound, and a strong dividend was declared and paid in June. You'll see here that we have a policy around paying 50 to 60% NPAT on our dividend payout ratio, which we achieved this year. And also you'll see there's some information showing the past 3-year average of dividend payment, as well as the FY21 numbers. To provide some context to the scale and how well established our market is, the New Zealand car industry consists of about 4.4 million registered vehicles in New Zealand. And with 90% of vehicles registered being light vehicles, the growth of around 3% of vehicles each year equates to about 130,000. In the used car space, 150,000 used passenger vehicles are imported annually, and 96% of those used vehicles or light passenger vehicles are imported from Japan. Also, the other key thing to look at here is that more than 2.2 million, or half of the vehicle fleet, is predicted to be replaced in the coming 10 years. In June, the government introduced new measures to help drive down New Zealand's transport emissions. The Clean Car Discount aims to increase an uptake of low emission cars by implementing a rebate scheme. From the 1st of July, this was effective, and from the 1st of January, this will include other low emission vehicles, and this will create a significant opportunity for us. While policy implications are still being ironed out and the impacts understood, we support the intention to have a cleaner New Zealand fleet over time. With our customers being middle New Zealand, them adopting this policy or this process to move to cleaner cars will probably be the tipping point in New Zealand. Currently, 2/3 of our sales would be neutral or receive the fee bait, and we need to monitor and adapt to the changes in demand to adjust our buying accordingly. So if you'll see here on this chart, the vehicles in green down below the line, they have low emissions, they will receive a rebate. The ones in orange above the line will receive a fee payable. You would have heard some of the talk in the media about this recently. It's been quite a hot topic. So it's very clear guidelines that we can assess by car which car would sit and attract a fee and which car would receive a rebate or be zero rated. So we're taking this into consideration with the buying effective immediately. To accelerate the shift to clean cars, we talk about the 3 A's here at NZAI. Availability, and this is an area that we can help influence the supply and ensure that there's supply of both HEVs and EVs, as well as low emission petrol vehicles. We also talk about affordability. We work hard to keep costs down and make sure that our key customers in that $5,000 to $15,000 price range are still able to afford cars that meet those criteria. We also talk about awareness. So it's about helping our customers become educated around the areas for them that there might be an impact with electric vehicles or hybrid vehicles. You know, what do they need from a charging support or from maintenance, etc. ongoing. And so we can play a role in each of these areas, but ultimately we're going to have to work to respond to the customer demand. As you'll see on this chart, we already have 21% of our customers buying EV or HEV in the last quarter of FY21. So we're very much part of that market now. Our purpose is to help Kiwis afford great cars, and our strategic goals to become New Zealand's most innovative vehicle solutions provider and deliver more cars to Kiwis than anyone else. So to do this, we need to deliver the best used cars, be a trusted brand and partner, grow the company value for our shareholders as well as our wider stakeholders, including our community, and lead the way on initiatives such as clean cars. We've identified 5 strategic pillars in our strategy, and I'll touch on a few areas from each of these pillars. The first one is to leverage our strengths. The business has been very successful to date, and we want to continue to focus and invest in areas that have been successful. The first area is expand our hub. Our hub is where we process the cars that come into New Zealand once they've been through compliance, service them, groom them, and send them out to our dealerships. If we invest in this area, we believe we can unlock some significant growth, which will allow us to essentially move more cars out to our dealerships. We also actively increase the supply of affordable EVs and HEVs, which is a key strategy for us, and I've talked about that in terms of the decisions we're making with our buying at the moment. We'll also leverage our scale to drive efficiencies. We are one of the largest providers. We do have scale and we do have some advantages that come with that, so we're going to be looking to continue to drive that through. The second pillar that I'll talk to is around growing our retail distribution platform. The expansion of our national dealership footprint is something that we're continually looking at. We're also looking to upgrade and modernise our existing physical dealerships. Recently, we did this with our Hamilton office, and it's been extremely popular. We're also continuing to upskill our sales staff and automate our processes. The third pillar is around growing vertical integration. So we're looking to deepen the finance penetration, closing that gap that New Zealand Motor Finance currently finance from 30% of the opportunity, currently operating 4%, to grow it closer to that 30% of opportunity. We're also looking to grow the loan book from third-party automotive retail dealers, in addition to 2 Cheap Cars. So this is where we talk to other dealers out there that might be able to leverage and use our facilities. The fourth opportunity for us, is around improving our digital offering. There's an opportunity for us here to refine our end-to-end online buying process. This includes finance integration. Through the last lockdown in Auckland, we saw an uplift in interest through our digital platform. We saw a number of people paying a deposit, looking at a car, paying a deposit, coming to dealership to purchase. So we see that as a trend that's going to continue to grow, and we're well placed to support that trend. We're also going to develop a meaningful partnership network. So we offer a range of services and products at the moment. We think we can expand this through partnering. And our final pillar is around building brand and customer experience and creating a best-in-class customer experience that fosters brand loyalty. The opportunity here is for us to deepen our connection with our 130,000 followers on social media through thought leadership. Clean Car Policy is a good example of this. Also to invest in the best talent increasing our people capability. And the final area that we're going to invest in is going to be our customer care team. The key takeaways, we have a clear purpose, helping Kiwis afford great cars. We're an integrated business with a valued customer base with over 10 years operating under the Two Cheap Cars brand and 12 dealerships across the country. And we've sold over 60,000 cars with 130,000 social media followers. And we have a very well-established supply chain from procurement in Japan through to sales in New Zealand. We have a proven track record of solid financial performance. We have a strong cash flow delivering shareholder returns, highlighted by a FY21 dividend payment. We have a strategy for long-term growth, focusing on the opportunity that the automotive retail business presents us. We also have an experienced board and management capability, providing strong governance and to lead the company's expansion and drive our growth strategy. So that's all from me. I think I'll just say one thing before passing over for questions, is that we have a great amount of information on our website and also as well as on the NZX. So if you are looking for any more detailed information around our financial performance or any other aspects of our business, you can reach it there or feel free to get in contact directly with me. Thank you.
Cheers, David. Great stuff. Thanks for that. Really comprehensive. We do have a few questions. We'll try and get through as many as we can, as I said. Both relating actually to the kind of EV, HEV space. So one is, how do you see the growth of the EV market affecting the market? So affecting things in the longer term. So I guess we're thinking about that 21%. FY21, I mean, how do you see that number moving into the future?
Yeah, it's an interesting question. At the moment, the number of 21% includes EVs and HEVs. So there's a small portion of that is actually EVs. So the EV number in New Zealand at the moment, I think it's on one of the slides earlier, is quite small, but seeing the recent legislation and also the recent interest from consumers based on the media attention, certainly we see that as growing. I think it's going to take time. I think people are worried about the really immediate impact of this, but I think it is actually going to take time. It creates an opportunity for our business in the sense that we have the ability to procure those vehicles ourselves. And there's an opportunity in the market at that sort of mid-range, that $5,000 to $15,000, where the rebate actually makes quite a material difference versus at the higher end of the market where the rebate may be less effective or less as a percentage of the overall cost.
Okay, great. Thanks, David. And actually, that's a nice segue into this other question, which I think you may have already kind of touched on really with that. But the question is, will the clean car discount increase or decrease demand for your cars?
So we think it will increase. So what we sell currently, just to give you one idea, we sell a popular car called the Toyota Aqua, which is a hybrid vehicle, a mid-range hybrid vehicle, sells for around about $10,000. So we sell, we've had months where we've sold over 100 of those in a month. So we see that from the 1st of January, that car will receive a discount of close to $2,000, or sorry, a rebate of close to $2,000. So we definitely think that will increase the demand for those types of cars. I suppose it's like any free market, or any market, I should say. What you'll see is supply and demand will adjust. So we're really monitoring that and just seeing what's happening with the buyer behaviour. But certainly there's right in the sweet spot for us, particularly from the 1st of January with the hybrid electric vehicles.
Fantastic, thanks, David. Another one here, I think we'll keep going with these. How do NZAI see the effect of higher freight to the bottom line? I think I interpret that's higher freight costs to the.
Yeah, that's a good question. So we haven't seen much of an uplift in freight costs recently. However, we're starting to see some market signals now starting to come through around freight increase costs. So that's something that we're working through, but we've been fortunate enough over the last couple of years where it's been very flat. But we don't see anything in the short term that's going to cause us any issues. It's probably more into that sort of longer to medium term. And it's one of those things that if you continue to work with your freight partners, you can negotiate and come out with a good deal.
Fantastic, thanks, David. I think we're still good for time, but we do have them rolling in now. The next one here is NZ prices are dependent on the used car price in Japan. What trends are you seeing in used car prices in Japan?
Yeah, so used car prices in Japan follow a little bit of a cyclical process. Different times of year have slightly different prices, but it's something that we monitor every day with our team in Japan, and we get updates on a regular basis. What we did see was a little bit of a spike in the price around electric vehicles with the government announcement, but it's actually normalised a little bit and tapered off in the last week, but that's only a very small sample set, so we might see that continue to rise. But overall, it's been pretty steady. For us, we don't see too much concern there. As I say, we monitor it very closely on a sort of a daily basis and are able to get right down to individual car level. But it's something that we continue to monitor closely.
Okay, great stuff. I think we've got probably time for another one. How important is the development of digital platforms and new products for your business? Do you see this as a key sales channel now?
Yeah, it's certainly an emerging sales channel for us, and it's something that we're really keen to explore and develop further. So we have the ability now for our customers to be able to sit on the couch, find the car that they want from their armchair at home, pay a deposit, hold that car, and then come down and do that final inspection at the dealership. We think that's something that customers enjoy doing, and it's something that's a growing trend. We're seeing growing hits on our websites around that. So certainly that's a big opportunity for us. We've invested quite a bit in our digital platform in the last 12 months to get it ready to be able to cater for the growing demand around that space. But ultimately, people still want to be able to go and see the car in person. So I think there's definitely a place for it. It's going to be a growing part of our business, but it's going to take time for consumers and customers to adopt it.
Okay, great. Thanks, David. We've probably got time for one more, and anything that's said to the audience, sorry, as I said at the start of the session, anything we don't get to, we will get an answer over to you in due course. The question is here, can you import most EV vehicles from Japan, or do you need to source them from elsewhere in order to meet the future EV demand?
Yeah, that's an interesting and quite broad question. I think there will be. It really depends on how quickly that demand does grow. So the impact of the government subsidy, it's a little bit unknown how quickly people are going to move towards EVs because there's a number of factors around EVs. What we've seen in the last 5 to 10 years is a growing adoption of HEVs because people don't have the range anxiety or the other concerns that come with a pure electric vehicle. But in terms of the demand, I think there will become a time where in the used car space that will continue to see the demand grow, and as such we'll have to continue to look at different markets to supplement Japan. At this stage we're seeing plenty of supply availability out of Japan for the small number of electric vehicles that we sell. I think the opportunity for us is more around the hybrid electric vehicles and what might happen there. But yeah, certainly it's a good question because it's something we're going to have to monitor with the legislation only being so new and the potential consumer demand changing quickly.
Okay. All right. Thanks, David. The others will come to in due course. David, thanks very much for this afternoon. Enjoy the rest of your day and speak to you again soon.
Great.
Cheers,
Thanks
David.
very much.
Thank you very much. And we're going to move on now to our second presenter, Brian Watson. Warm welcome to Brian, CEO of Bliss Technologies. Bliss is a manufacturer of advanced probiotic strains that enable the delivery of probiotic solutions for specific health targets, including throat health, immune support, and teeth and gum health. I think it's fair to say in the current environment, proactive treatment of health issues is something very topical. So keen to hear more. Brian, over to you. We'll be back in a few minutes with some questions. Thanks, Brian.
Great. Thanks, James. And thanks to the NZX for the opportunity to present to people here today. And thanks for taking time out in your day and the interest in Bliss Technologies. I'll just set up my slides here. So can somebody confirm that they can see my slide there?
Yeah, we can see you, and we can see them very clearly. Thank you.
Great. Okay. I'll just start by sharing a disclaimer that will be available with these slides. So don't expect people to be able to read that in the short amount of time we have here today. What I wanted to cover with you today is just give a company overview for those people that don't know Bliss Technologies well. talk a little bit about our financial result for the financial year 21, and then very much focus on our strategic focus and our growth agenda as we move forward in this financial year and beyond. So first up, just the company overview. Keeping it very simple, we have a very clear purpose as a company. It is around developing breakthrough probiotic solutions for health and well-being, with an absolute focus on global consumers. As a business, we have 3 core revenue streams. We provide our probiotic strains as ingredients and sell them under the Bliss Ingredients brand to other brand owners who launch products in international markets. We also have a revenue stream focused on our own Bliss branded probiotic finished products, which we sell in pharmacy retail stores and online. And then most recently, we've launched an additional brand under the company umbrella, Unconditional Skincare Company, which is the launch of a product, a breakthrough product in the skincare space, which is new for us. But it's important to note that what underpins the business is innovative breakthrough R&D. Unlike a number of other providers of dietary supplements or probiotics, we very much utilize our own R&D and discovery work, and that underpins the innovation we take to market globally and here in New Zealand. So a little bit about the probiotic space, a little bit of background. So you've probably heard the term, the microbiome. That essentially is the community of microbes that live on the body and in the body. Typically, people, when they think of the microbiome and probiotics, they may default to thinking about probiotics that target the gut space. As a company, we've chosen to focus on areas where we're confident that we can be leaders and deliver innovative product solutions. Our heritage originally was in developing the very first oral probiotic. That's a probiotic that is from the oral cavity and for the oral cavity, delivering health benefits from that space. And the new area that we're focusing on, which we see a leadership opportunity, is in the skin space. What we recognize is that probiotics targeting the gut space, it's a highly competitive market, and one we don't really see ourselves being able to deliver innovation beyond what's available today in the market. So it's focusing on those other areas. So our oral targets are ear, nose and throat, upper respiratory health, immunity, and we have got a product that includes our probiotic offer with gut strains that are well established. Dental health, which includes prevention of dental caries and maintenance of gum health, and then cosmetic skincare in the skin target area. Importantly, we do focus on extremely attractive markets. We are in a market of probiotics that are riding a wave of popularity. The probiotic retail market globally is worth about approximately $6.7 billion. It is the fastest growing subcategory of dietary supplements today, growing faster than vitamins, faster than calcium, faster than omega-3. And so is and does represent an extremely attractive market. And that growth is forecast to continue strongly. The new area of skincare we also see as an extremely attractive market opportunity. It's estimated that the global premium skincare market is worth around $140 million US in 2019. And there is this new emerging space of probiotic-based microbiome modulators in the skincare area. And that market's forecast to grow from approximately 500 million back in 2019 through to around 3 million in 2030. 3 billion, sorry, in 2030. So we are operating in a couple of extremely attractive areas, the probiotic dietary supplement space, and in the topical skincare probiotic market, which is also emerging to be a very attractive market opportunity. A little bit more information around the product offers that we have launched into global markets. So we have, as I talked to earlier, 3 broad revenue streams. If I start at the top level around our probiotic finished product range, we have a product range that's available here in New Zealand, that's replicated in other markets and sold both in retail and in direct-to-consumer online opportunities. They cover a couple of key areas as I talked to: ear, nose and throat and immune support, and dental health. And the probiotic strains that underpin those are Bliss K12 and Bliss M18. The new area, as I said, that we've entered is the topical skincare market, the cosmetic skincare market, and that the benefits for that product is delivered by a new probiotic strain offering that we've launched, which is Q24, and that again is a proprietary patented both strain and formulation in that market opportunity. A little bit about our last financial year operating performance. On the top left-hand side, we see the 5-year revenue the company's delivered with a CAGR over the 5-year period of 14%. In FY21, the company, the revenue was stable compared to the prior year. Our EBITDA in FY21 was slightly below the prior year, and that was driven by significant investment in new market and new product offerings, which I'll touch on as we go on the slide. And then in the right-hand side, it gives a breakdown of the global market revenue streams, with the US being our largest market now and experiencing significant growth in FY21. Beyond that, talking about non-financial achievements through FY21, we're excited that we were able to launch into the Canada market, an extremely attractive market for us. It's a market where we've got extremely favorable regulatory approvals. We are able to make specific claims for our probiotic offers in the market, and they're attractive and being able to effectively position our products to Canadian consumers. And so we've moved forward in the Canada market, both in the retail space through retail pharmacy and health stores, but we're also available online through Amazon in Canada, and we'll continue to expand the online platforms as we move forward in the Canada market. The other exciting market development in last financial year was the launch of our Tmall flagship store on Alibaba, a key step in positioning our product range to the Chinese consumer. And we've partnered with an experienced agency and distribution partner to get our product, essentially our New Zealand-based range, to Chinese consumers via both Tmall, but also connecting with Daigou and selling direct to Chinese consumers via those platforms as well. Important new product development for us in FY21 was the release of our 3rd commercial probiotic strain, Q24, but it really was the launch of our Unconditional Skincare brand and the launch of our first product under that brand, a live probiotic hydration serum. And I'll talk a bit more about that later, but that's certainly a breakthrough product offer within the cosmetic skincare area. Underpinning that Canada launch, I've talked a bit about the approvals for our products and the strong health claims that we've achieved in the Canada market. But we also achieved approval of both of Bliss K12 and Bliss M18 in the India market, and are working with our partner in India to develop the commercial opportunity in that market. And then finally, through FY21, we had a strong focus on developing our internal capability. We've very much focused on developing capability around e-commerce internally. We continue to build our marketing team to support the product range that we're taking to market. And we've also brought on new capability within the ingredient sales space, which further increases our commercial endeavour. The next section, I'll talk a little bit about our focus on growth. So we have very clear commercial priorities around building our branded finished product sales with a key focus on e-commerce. It's pretty clear that COVID's accelerated some of the trends toward purchasing products via e-commerce, and the dietary supplement space is very much aligned to those trends, and in fact is performing extremely favorably within e-commerce. Dietary supplements, including probiotic offers, represent a well-suited product offer within e-commerce. We're able to drive forward things like subscription opportunities, bundling opportunities, really trying to drive repeat purchase through e-commerce. So it's an attractive path to market for us as a business. Our priority markets within e-commerce, Australia, New Zealand, US through the Amazon platform, and China e-commerce, with Canada also coming on stream towards the back end of last financial year. Along with that, in selected markets, we will continue with our endeavour within retail, typically within pharmacy retail, and we have a presence today across New Zealand, Australia, and Canada. And within those markets, our endeavour is really an omni-channel endeavour, building brand awareness and purchase through both retail and e-commerce. As a business, we have our 3 health and wellness targets, our ENT and immunity space, the dental health space, and skincare. And we continue pipeline endeavour across those 3 health targets as we move forward. Ingredients still represent just above 70% of our revenue stream. Ingredients represent a great opportunity to drive additional scale in large markets where there's untapped potential. And US, Japan, and China remain our key focuses for our ingredient business as we go forward, and we see opportunities for growth continuing. Finally, we will continue to invest in our pipeline. We have a history of developing breakthrough probiotic solutions. We have a pipeline, an attractive pipeline that we will continue to drive forward, which gives us a long-term sustainable opportunity, bringing innovation to market. It includes new product development, new strain development, and the investment in intellectual property to protect that pipeline. But we will also continue to seek collaborations with aligned industry partners as we move forward, recognising that servicing markets globally, partnerships and distributor relationships are important to us as we go forward. I'll finish up by just sharing a bit about our most recent product launch under the Unconditional Skincare brand. We're very excited about this product offer. It is being extremely well accepted by consumers. Late last year, into March and April, we started to roll out the first of our launch activity with the New Zealand customer base at this stage. It is absolutely a breakthrough innovation. For us, the addressable market is premium skincare, but our competitive advantage very much is focused on delivering breakthrough probiotic innovation. What is so attractive about the skincare market? It is large, but there is a consumer base that is highly engaged and looking and willing to pay for breakthrough new active ingredients, and probiotics absolutely represent that. The product that we've brought to market is unique in delivering a live probiotic for cosmetic skincare application. We've seen extremely favorable results over continued use and demonstrated that through both survey work within the US and New Zealand, as well as small clinical evaluations here within New Zealand. But the product is positioned as a hydration serum for both evening and morning application. And finally, I'll just share a couple of the images around both the online and above the line activity that we're undertaking to support the product. The product delivering balance to the microbiome and allowing the skin to overcome potential issues that people are experiencing, and particularly females are experiencing with their skin in the skincare market. So that was all I had for today. So more than happy to take questions. Hand over to you,
Great.
James.
Thanks very much, Brian. Great presentation, really in-depth, so great stuff. Yes, we do have a few questions here. We'll try and get as many of these asked as possible. So the first one, there's two parts to it. The first part of which I think you already covered, but if there's anything you want to highlight or expand upon. So firstly, where do you see the biggest future revenue growth opportunities? And secondly, do you think that you have adequate capital to quickly take advantage of those opportunities?
So like I have talked about the revenue growth priorities that we see, it is very much a focus on our finished product range within the online space is significant, and our priority markets across US, Canada, and cross-border e-commerce would be where we see the priorities as we go forward. I think the beauty for those markets is that we have a product range that is attractive, but we're able to essentially leverage the same range to consumers in different markets and connect with them effectively based here in New Zealand. The second part of the question, sorry.
Yeah, in terms of, do you think you have adequate capital to quickly take advantage of those revenue streams and opportunities? Yeah.
Yeah, so we have to date reinvested back into the business and self-funded our growth to date. We do have sufficient working capital to continue for the business to move forward with that, but we are constantly evaluating capital needs, but most importantly, the opportunity to accelerate new market endeavor and launch of new products. So at the moment, we don't have specific plans to raise capital, but we can continue to evaluate that. And ultimately, the key question for us is that confidence in essentially accelerating our revenue with that capital.
Okay, great. Thanks, Brian. We're probably time for a couple more. How do you see probiotic solutions evolving, and how do you stay ahead of the curve?
Yeah, so I have touched on, so one of the challenges in the probiotic space, particularly if you're focused on gut probiotics, is there is a lot of product offers out there that arguably have limited differentiation. There are some standout strains that have very strong evidence base, and I think that's one of the key things to competing in the market is developing the right evidence base behind your probiotic offers and the credibility that represents. But our focus has been very much on looking for white space, looking for space that there is unmet need or unmet opportunity, and that's why we have focused on oral and are moving to the skin space. And that's why we continue to invest in internal R&D and discovery work to continue to develop new product offers. I think that really is the key to continuing to compete globally. But there is also the opportunity to sell our ingredients to established brands that want to build out their portfolio. So that, you know, that underpins our business nicely and funds future innovation.
Great, thanks, Brian. Probably time for one more, I think. Which retailers in NZ support your range, and what would be the degree of market penetration?
Okay, so we are available in Green Cross Health pharmacies. So that's the Unichem and Life pharmacies. We are available in independent pharmacies in New Zealand, well ranged. Chemist Warehouse is also a seller of our products within New Zealand market. You know, we will continue to, you know, support that retail pharmacy endeavour as we go forward. There was a second part to that, was there?
If you're able, I guess, yeah, the degree of market penetration.
Yeah, that's a more difficult one to answer, I must say. We are a unique probiotic offer. So when we think about our market penetration, we actually do also look to the areas, the health benefit areas, rather than the probiotic category, if you like. So, you know, we have a very strong and are the #1 selling throat lozenge in New Zealand. So that is like a key parameter of our penetration within New Zealand. So in that market, we do compete with alternatives that aren't probiotic based, but include Diflam, Strepsils, other product offers that help people manage throat issues. We are more about prevention of sore throats in that space, but that's an indicator of our penetration within the market.
Okay, thanks, Brian. I think we'll leave it there. We do have a couple more questions that, as I said, we'll get those over to you after the session, and we'll get those answers back to the audience in due course. Brian, thanks very much on behalf of NZX for coming on this afternoon, and look forward to seeing you again soon. Thanks, Brian.
Great. Okay, thanks for your time. Thanks, everyone.
Thanks very much. Thank you. And that concludes the Retail Investor webinar for July. Thanks to everyone who joined this afternoon, and again to our presenters. We're back in August, so see you next month, and enjoy the rest of your day. Thanks very much. Bye-bye.